maybe we'll just look at the microloan situation for a moment, because I think it's a really good situation where somebody who maybe doesn't have a good credit record, and often through no fault of their own, maybe they got into trouble during the downturn, or they lost their job, or whatever, that they don't have the credit record that they would need to borrow from other financial institutions. And they can do under the credit union system by the repayments being connected to maybe their social welfare payment or that. So why is it that such a low number of credit unions are operating this microsystem? So in Mayo, for instance, we just have 2 of the credit unions that are able to offer that loan system. Could you just speak to that to me for a moment? And I know you've referred to, I think, in one of the reports as them being a loss leader, but maybe just talk to me around the interest rates and what would need to be done in order to make that viable for all credit unions.
Yeah. I suppose I'll touch on a little bit of it. The It Makes Sense scheme, the personal microcredit, is run by the Department of Social Protection. Obviously, that only applies to people who are getting social welfare. Yeah. It's worked through with An Post, so there's a reasonable relationship there. So it only applies to those borrowers, and there are other low-income borrowers who credit unions would obviously lend to in the normal course of business. When Department of Social Protection and the credit unions are involved in saying why aren't more credit unions doing it, there are a whole variety of reasons, including interest rate, potentially charges related to the process, administrative cost for what are very small loans. So they're a few €100 for a very short period of time, so they're paid back quite quickly. So the amount of money is very, very small. So there are quite a few issues which maybe my colleagues either side will touch on. So where we came down in the report in relation to the interest rate cap specifically, we recommended as a group that would be increased from 1% per month to 2% per month. It wasn't wholly tied to that cohort of borrowers who were in the personal microcredit scheme. That interest rate cap applies to all credit union lending, so we were recommending it be increased for all lending. We saw that one of the main reasons is to give boards the flexibility to be able to price slightly higher if they want to. It will be a board's decision whether they want to or not. That would go some way towards meeting the higher costs of some of that small lending, but it mightn't go the full way towards it. It's only one of the reasons why credit unions might not get involved in that scheme. So I don't know, Ed, do you want to touch on some of the reasons you see on the ground from your members?
That's a good, I suppose, synopsis of it. I mean, we have half the credit unions are already in the scheme, and we'd be fairly sure that would be more than, on a population basis, that would be more than half the population base of the country covered. A lot of the credit unions in the more urban areas would be in, so we're hoping to get more credit unions in, and I think Brian has explained the rationale there on the interest rate, so that would help some other credit unions defray some of the costs. It'll never be done to make money, as it were, but there is I suppose, duty bound directors of credit unions to not lose much on a product line either, and not to be overly subsidising it. There is I think it's a 25-cent per transaction charge from An Post to administer it. It's obviously very good that we were able to get the deduction from the social welfare, because that makes it almost like a secured loan, or it's like paying your taxes. The deduction at source is a much safer, and that gave, I think, comfort to everyone that the arrears would be much better than if there wasn't a deduction at source. So it's a matter of us encouraging more and more credit unions, and indeed we've always said it to deputies and senators, you encouraging them with us to open up that line in your local credit union if it's not open, because it's certainly something that we would like to see. the whole country covered by, and certainly there's the independent UCC research on the interest rate caps right across Europe into money lending and the credit union cap interest rate, and all of them would say we have to have the country fully covered before we can expect to make a real indentation, as it were, into the money lending. So I would expect more credit unions to come on board, but I would like to, again, I suppose, stress that there is half the credit unions and more than half of the country covered. So in a 3-year period, we went from launching it, and there's 7 or 8 stakeholder groupings involved, including all of us here today, and then the department and on post, and it has worked well from a standing start, and there is monthly meetings of those groups trying to make sure that we keep the momentum now that we have it and get more and more and more families into this scheme away from much more expensive and less desirable sources, I suppose.
Yeah, I would really encourage you to do that, because, say, for a county the size of Mayo, if you have only 2 credit unions operating in the area, it's impossible for people. Many of these people don't have transport, so access to a credit union, and obviously you have to work within your own locality as well. So I do think that, bearing in mind that we have over 300,000 people who are currently lending from reckless money lenders, I think that needs to be changed, and I see there's 2, I suppose, bodies I can see in addressing that, and that's beside the fact that we have legislation in around it. Pierce Darty has legislation in to cap the money lending limits, but yourselves, the credit unions, as being the most trusted organisation, if you can bring people into that space, working with MABs, because I think MABs, the Money Advice and Budgeting Service, do a wonderful job, and the most successful cases that I deal with are the cases where there is the combination of the MABs advice and the credit union supports, and that way people can really kind of get out of the traps, the financial traps that many of them are in, or from the exploitation of these money lenders. So I think it's hugely important.
Just to further on Senator Conway-Walsh's question there, I think it's not simply about what the credit unions do and don't do. I think there is a case to be addressed around the whole area of money lending, and it's not just in the area of rates, it's in the area of practice. And it seems, for those of us like who we'll say would have people in a lot of the communities that are most blighted by this, that it is open season on the consumer. There is virtually no effective protection for people. Things like, for instance, the whole area of the Consumer Protection Code, it's not thought of, or it's not operated next, nigh or near to money lending. And one of the actual serious disadvantages or serious causes of reluctance by credit unions is the knowledge that the moneylender can swan back in the next week, and some of their mechanisms for persuasion and for collection are certainly not for the faint-hearted. And I think that we can talk and such about, and we can address things like rates and stuff like that all we want, but unless there is a more holistic approach to this whole area, from a legislative and from a consumer protection point of view and from a regulation point of view, we will still be sitting around here in 2 or 3 years' time asking the same questions and wondering why sufficient progress isn't being made.
Yes.
So I suppose the message is, this has to be a more holistic approach.
Absolutely, and I do recognise that the bill that Pierce Darty is putting forward is just to cap rates, if you like, and that's only part of the problem. And the thing that really worries me is that many of these people are not paying their mortgages because of some of the pressures and the practices that you talk about are put on them. So they're paying the moneylender the extortionate rates instead of paying their mortgages, and they're putting their homes at risk.
And they're paying them because these people show up on their door regularly, week in, week out, to collect the money. If I could make a further point there about the unpost charge. And look, unpost have to wash their face financially. But if, for instance, we'll say somebody commits to paying €10 per week, and 25 cents of that goes straight out and goes towards a charge, that account is going into arrears. And like part of the project here should be to rehabilitate the credit status of people. And I know it's a small amount, but it's still actually, and with the advocate or the whole issue of the CCR, the Central Credit Register and stuff like that, this is another area that does need to actually get addressed at some stage.
Johnson.
Just briefly to comment on that. I think as Mr. Farrell and Mr. Mullen have explained, you can see that there's a lot of work going on, and we are working collaboratively on it. And one of the things I think is worth noting is that many credit unions are doing this and have been doing it for many years. So while it may look like only half of the credit unions are in this particular scheme, we are getting lessons from those who have been doing this type of work for many years. And indeed, the very foundation of credit unions was that to address the bigger problem where people could not get access to credit. So it's a core competency of credit unions dealing with these issues.